importance of auditors' independence. I've seen that question being asked in the class of auditing and assurance, whereby the examiner will ask you, explain the importance of auditors' independence. Why should auditors be free from influence? That's the question we are asking ourselves here. It is very simple. One of the reasons why auditors should be free from influence is because by definition, auditing is a what? Auditing is an independent examination. Auditing is an independent examination of books of accounts and financial statement. So if the definition of auditing is an independent examination, then those people who are practicing it must also be what? Independent. And so independence is a compulsory for auditors, because by virtue of the audit being independent, you people who are practicing it should also be independent. Did you know that if you are not free from influence, you can be suspended from practice? You can continue maybe not acting as an auditor. So we say it is a legal, not a legal, but a professional or ethical requirement. It is one of the main requirements by the professional body that each and every accountant should be what? Should be free from influence. That's a requirement. But as we said earlier, it is also illegal. If you go through the lesson whereby we discussed removal of an auditor, we said an auditor can be removed if he has not been free from influence, if he has not been independent. And therefore we say it is a legal requirement. It is a legal requirement. Sometimes we say an auditor is a watchdog, and therefore he should be free from influence if we expect him to give us credible report. An auditor is a watchdog, and therefore should be what? Should be free from influence. A watchdog is not supposed to be compromised, because once it is compromised, it makes the thief to come and steal. So an auditor is a watchdog, and therefore he should not be done what? He should not be compromised, therefore he should be what? He should be independent. But we can also go ahead and say that third parties who uses the audited financial statement, third parties using audited financial statements would wish the auditor to be what? To be independent. And if the auditor can be independent from that perspective, they'll know that the financial statements are credible. Third parties using audited financial statement wishes auditor to be independent. And therefore, that one will add credibility to the financial statement. So I have like 5 points that by definition auditing is an independent examination, and therefore those who are conducting it should be independent. We have also said that it is a professional and ethical requirement. It is one of the fundamental principles that auditors should be free from influence. It is a legal requirement. The Companies Act disqualifies some people from not being free from influence. For example, if you accepted bribes or maybe loans from the company. Auditor is a watchdog, which means he's supposed to watch on the resources of the client, and therefore he should be free from influence if he's going to maintain that good name or maybe that particular watchdog role. Third parties who uses the audited financial statement will wish the auditor to be independent if he's going to be giving credible reports or credible financial statement. And that becomes the importance of the auditor's independence. Now, having covered the auditor's independence, as well as conflict of interest, advertising, and audit fees, I would like to discuss one more item called professional misconduct. Professional misconduct. If you breach the law of your country, then you are charged with a criminal offense. If you breach ethics, we call that professional misconduct, then it means you are supposed to be suspended from practice. So here, we are looking on those particular events and activities that auditors do, and which would amount to what? To professional misconduct. I am an auditor. I was doing 1, 2, 3, 4, 5 things, but some were not ethical, so they were amounting to professional misconduct. So professional misconduct arises when an auditor breaches what? Professional ethics. Professional misconduct arises when an auditor maybe does what we refer to as that is unethical, something that is against the morals. A good example is when an auditor destroys the company's financial statement, destroys company's financial statements. That is unethical. It is one, illegal, two, it is unethical. It's likely maybe to say you are likely to face so many problems with that. If you are an auditor and you know you are not what? Qualified. Knowing that you are not qualified as an auditor, not qualified, and practicing as an auditor, that is also what? Unethical. And practicing as one auditor, that's unethical. Did you know that auditors, they keep client money, and whenever they are keeping clients' money, they are supposed to do what? To maintain two separate accounts. So you say failure to maintain a separate account for clients' money. Separate accounts for clients' money. And that's not the only problem. If you are an auditor and you know that financial statement contains misstatement, know and that financial statement contains misstatement, but you do not disclose that fact. Knows that financial statement contains misstatement, but you do not disclose that fact. That will affect your what? Your ethical behavior. If you are an auditor and you keep on providing guarantees, or you give maybe what? Debts to the company. You receive debts and give debts to the company. Giving and receiving debts to the company is what? Is prohibited, and that amounts to what? A professional misconduct. Did you know you are not supposed to advertise? So when you advertise for professional services, that will amount to what? Professional misconduct. In simple terms, all the illegal activities that we had listed earlier on would amount to professional misconduct. And so you can provide as many as possible based on the criminal charges that we had covered. And with that, I bring this topic to the end. That is professional misconduct. The whole topic was about professional framework. It was covering two lessons. One lesson was fundamental principles, safeguards and threats. That is what we covered the other time. This time, lesson was about other ethical matters. We started with the audit fees. We have done advertising. Then there is conflict of interest, independence of an auditor. And lastly, we have asked ourselves, when an auditor breaches any of those particular factors, what is he supposed to be charged with? He's supposed to be charged with professional misconduct. If an auditor performs anything that is illegal, for example, destroying the company's financial statement, that will amount to professional misconduct. So I'm still wishing you all the best, but I also tell you to refer to that book of ours, whereby I told you it's called Auditing and Assurance. Auditing and Assurance. That one has a whole topic of professional framework. It has all those terminologies that we had given, like low borrowing, contingent fee, and undue dependencies. Those ones you're going to find all of them there. They can help you maybe to get maybe the clear definition or the standard definition.